Hey everybody, it's Skyler with Utah Seniors Home Search. You know me. If this is your first time to my channel, I helped seniors downsize out of their single family homes into 55 plus communities where there's less maintenance, less yard maintenance, and no stairs. And here with me today, I've got Matt Harrison with Movement Mortgage. And Matt is one of our preferred vendor partners, specifically dealing with the reverse mortgages. And so we're going to learn a little bit about reverse today and answer a lot of the most frequently asked questions about reverse mortgages. But before we do that, like I said, I help seniors downsize out of their single family homes into 55 plus communities. And if that's the situation that you find yourself in, give me a call. My contact info is on the screen here. It's also in the video description. And I love helping seniors who are in that situation, because there's so many different challenges that are unique to seniors that they face. And so it's really important that you work with somebody who understands your challenges and understands the specific needs of seniors. So anyway, if that's your situation, give me a call. Here's my contact information. And without further ado, we're going to talk to Matt a little bit. Matt, what got you started in reverse? Why are you passionate about reverse mortgages?
Well, I think that initially it came from my dad having a need in real estate, and what he needed was something that was going to be a little bit better fit for him. He wanted to right size into a home that was going to allow for him to age in place, that would be big enough, to have kids and grandkids.
So let me ask you. You said something caught my attention, Matt. You said right size. A lot of the time, we in this space we talk about downsizing. What do you mean by right sizing versus downsizing?
Well, I mean, let's be honest. I mean, a lot of people are living in a home that might be a little older, might be something that doesn't quite fit their needs anymore. And a lot of times we think that particular individual is going to right size into something smaller. So smaller square footage, not as much yard maintenance, that sort of thing. My dad went on the other side. He actually decided to right size into a bigger home that had a pool, that had, enough space for kids and grandkids to congregate and be around. And anyway, so that was his issue. That was his problem. Is Matt, I have this smaller home. I need something bigger, and I need to figure out how to do this. And when I talked to him, I said, Dad, you've got a couple of different options. His house was valued at around $300,000, and he was looking at buying something around $620,000. And so with those options, he looked at it and said, okay, well, I can sell my house. I can get a normal traditional mortgage for the additional $320,000, but I really don't want to have the financial obligation as far as making principal and interest payments.
I assume at this point he's probably retired, probably not bringing in a steady income more than just his fixed income, right?
Right. And so that was something that he says, well, I'd really rather not do that. And so the next option for me at that point is, said, Dad, what about taking some money from your retirement fund, to be able to fund the difference? And, for him, he kind of looked at that option and said, I could do that, but that exhausts a very large amount of my retirement to be put into a house, into this illiquid asset that can't move. And so I said, all right, Dad, there's a third option. And at the time, this is years ago, I didn't have a really good, firm understanding about home equity conversion mortgages or reverse mortgages. And I said, let me look into this a little bit. And I came back to him. I said, Dad, I think we found a great solution and a great option for you. And for him, he had to bring in about $380,000 as far as his initial investment. The reverse mortgage proceeds, or the loan, took care of the rest between that and the $620,000 purchase price on his new home. And from that point moving forward, his obligation to make principal and interest payments became optional. So he was absolutely thrilled, and that provided me an opportunity to look at how this program works in a very close and an intimate way with my own family. And immediately I said, this can help so many people. And that was my introduction to it and my passion for it. And since it's been really fun. Been able to help a lot of families, get into a more safe and more secure retirement.
Well, that's awesome. Yeah, I love that story. I met Matt for the first time. We met on a property tour, and Matt, before we left on our tour, Matt gave a spiel about home equity conversion mortgages. And for those of you that don't know my background, am a former nursing home administrator, so dealt a lot with seniors and specifically how they were going to pay for nursing home care. And so that issue of how are seniors going to afford this, whether it be care, housing in some capacity on a fixed income, was something I dealt with in my career prior. So that really turned the light on for me as well. And since then, Matt and I have, been good friends and been in contact and worked together to figure out how we can help seniors together. So thanks, Matt. Appreciate you sharing that.
Yeah.
And so today what we wanted to do is we wanted to kind of walk through, we've got our reverse mortgage expert over here. So we wanted to walk through a lot of the frequently asked questions about reverse mortgages and help people understand what they are and what they're not, and maybe the ideal circumstance in which you would want to utilize a home equity conversion mortgage or reverse mortgage to purchase a home or to refinance your current home to, like you said, free up that otherwise illiquid equity. Mm-hmm. So, you okay if we get started with that?
Yeah, let's do it. Let's have some fun.
Start with some questions. Okay. Number one, you touched on it briefly, but if you had to give a nice, succinct, concise definition of a reverse mortgage for our viewers, what is a reverse mortgage?
So simply put, a reverse mortgage is a loan program that allows seniors 62 and over the ability to tap into a portion of their home equity that will allow for them to have increased cash flow, safety, and security in retirement.
Well, that's great. That's about as good of an elevator pitch as I could have expected. Okay, great. Yeah, cool. So how is it different from a conventional forward mortgage?
That's a great question. And there's a lot of misinformation out there about reverse mortgages. I like to use the term, there's a lot of fear that surrounds them. And fear is an acronym. It stands for false evidence appearing real. And there's a lot of fear that surrounds these. So I'm excited that we're doing this today so that we can really go through what a reverse mortgage is and what it's not and how it's treated. But if you look at a traditional mortgage, with a traditional mortgage, you have to make principal and interest payments every single month. It's the old adage, you have to pay to stay.
Right.
And you got to do that for your loan term, right? So if you've got a 15-year loan, you've got to pay that for 15 years or 30 years. And if you have a bad day or a bad month or a bad year and you don't have that income that you need in order to help you to make those payments, those months can be really difficult. You might start to pull from savings or from retirement accounts or even ask kids to kind of help out. So a traditional mortgage is great. It allows for us to stay in our houses and be there, but there is that payment obligation that comes with it. When you look at a reverse mortgage, the payment obligation, as far as principal and interest payments, is zero. You can make a payment if you choose. There's some great benefits to that, which we'll get into later. But the reality is that in retirement, the biggest concern for retirees is, did I save enough? Do I have enough money to make it through?
Totally.
Did I plan well enough in my early years to have the money necessary to be able to survive and hopefully really thrive in retirement?
And for so many, the answer to that question, especially without the use of their home, is no, because, life happens. A lot of people just aren't in a position, at least that's what I've found in my working with seniors, both in a care facility setting and now working with the 55 plus demographic in real estate. A lot of people just aren't prepared. So, yeah, sorry to cut you off. But,
no, you're fine. You put in great points there. And knowing that very few of us have really prepared well. And by the way, if you're in that group, it's okay. I talk to people all the time. There's a very small percentage of people that have really prepared really, really well because life happens. And sometimes even those that prepare well, they don't prepare well enough. And, you might get into your late 80s and 90s and say, oh, we're getting kind of lean here. But again, the options to be able to pull home equity and money out of your home equity are really slim. You really have three options. You can sell your house. You can pull out all your equity that way, but then you got to find a place to live. You can do a cash out refinance or a home equity line of credit, but both of those you need to qualify for and
make a payment.
You have to make a payment.
Right.
But a reverse mortgage, you're able to take money out if and when you need it. And that money is cash flow that can help to pay bills, medical expenses, hopefully, do some fun things like, trips and fun with the grandkids and things like that.
Yeah.
But this is additional money that you can draw on. And the great thing is that title remains with you. The bank does not own your home. That's one of the biggest misconceptions about reverse mortgages is that if I do this, the bank somehow owns my house. It's just not true. And, you have the ability to sell it if you want to. The equity position is yours. And at the end, there's nothing that the estate is left with as far as holding a bill. This is a non-recourse loan. And in most cases, if there's equity remaining, the estate can either refinance the house and keep it, or they can sell the house, pay off the mortgage balance, and the remaining equity position would then go to the heirs of the estate. Now, in the unlikely event that the market crashes right around the time that the home needs to be sold when the borrowers have passed away, the estate still has the same two options. They can retain the house by basically buying it back at 95% of the current appraised value, so they actually get a discount in a down market to retain it, or they can wash their hands of it, do a deed in lieu of foreclosure, and through a program called Cash for Keys, they can get money coming to them in lieu of going through the foreclosure process. But in no circumstance is the estate stuck holding a bill that they would have to pay.
Yeah, that's great. So yeah, you touched on a lot there, and I want to unpack it a little bit more. It's interesting. So it sounds like a great program on the surface. And for those that are listening that are kind of jumping and maybe salivating at the chance to do something like this, what are the eligibility requirements? Who can do it? Who can do a reverse mortgage or a home equity conversion purchase?
Yes, that's great. I can't yet because I'm not 62 yet. Now, I plan on doing one when I hit 62, but that's going to be your first eligibility requirement is at least one of the borrowers needs to be 62 years or older. Now, can you be 62 and married to your spouse that's under 62? Absolutely. But at least one of you needs to be 62. So that's going to be first. Second, this home has to be typically your primary residence or typically the primary residence of at least one of the borrowers. So that'll be another piece. The home itself has to meet FHA standards and requirements. This is insured through FHA, and so this needs to be single-family home, condo that's been FHA approved, townhome, PUDs, even a 1 to 4 unit, duplex, triplex, fourplex can work for this as well. So those will be some of the requirements. You still need to pay property taxes, as we talked about. Still need to pay homeowners insurance, HOA dues if applicable. Maintain the property and, like I said, keep it as a primary residence. Some other pieces to that, you do need to be a U.S. citizen or a permanent resident alien. So those would be some other pieces to that as well.
Cool. That's great. And then maybe next question, what are some of the different types of reverse mortgages? What are the ways that you can use this product, whether it's I'll let you get into it, but I know that you can purchase a home with a reverse mortgage. Maybe you can refinance. Tell us a little bit about that.
Yeah, that's a great question. So really, there are two different types of reverse mortgages that come into play. One on a house that you currently own, and maybe it fits for you. It's right. It has everything that you need or want in retirement, and you're not looking at moving. So for this house, you either own this home free and clear, or you still have an outlying mortgage on it and you're making payments. So let's talk about these first two groups here. The first one, if you own your home free and clear. If you are over 62 and you have a home owned free and clear, you really need to consider a reverse mortgage as a part of your retirement plan. Because right now, the home that you have, 100% of your liquidity is tied up in that in that home, right? In that illiquid asset. You can't take money out of it. And a reverse mortgage will allow for you to start to access that money if and when you need it. And there's a growth rate within the line of credit that you could have available for you that can really help with your cash flow needs way down the road in the future. A lot of people say, well, Matt, I'm 62. I really don't need a reverse mortgage. Well, let's be honest. Most of us don't need one. I will not need a reverse mortgage to survive at 62. But I want what a reverse mortgage will give me in my 70s and my 80s and my 90s, which is a consistent flow of cash flow. And that's going to be huge. So that's going to be a big benefit if you own your home free and clear. Look at this as an option that can allow for that to open up for you. And again, your obligation to make payments back on this money is optional, which is great. The second group we just talked about would be those that are still making a mortgage payment. Now, I gotta ask you a question, Skyler.
Yeah.
After age 62, a retiree, what do you think is the number one biggest concern for our retirees?
Ooh, I'd say in my experience, and I don't know if this is the tree you're barking at, but in my experience, they want to be closer to family.
Okay.
And they want to do away with maintenance. They want to do away with stairs. Their health is maybe the major concern. They're starting to plan for the future, trying to figure out how long is this going to last in my current situation. Heaven forbid an accident happens. Am I prepared? Am I ready? Does my current living situation fit in with that emergency preparedness plan? That may not be what you were getting at, but
no, those are great reasons. I Googled this yesterday, and I wanted to see if it was still true. But if you Google in what is the number one concern for retirees, the answer all surrounds cash flow. Do I have enough money? Now, all the things that you just mentioned, all of those things require money, require cash flow. And so that's a definite benefit to having money is you're able to take care, plan for the future, be closer to kids and grandkids, do things with them, help you to get yourself ready for the eventualities of, having a little bit more medical care and that sort of thing. So if we know that cash flow is the number one biggest concern, why in the world would we use money every single month in a monthly payment if we don't have to?
Totally.
Right? If you don't have to make a payment anymore, why would we make that payment if the number one concern is we want to make sure we have enough cash flow, right? So for those that are currently making a payment on a mortgage and you're over 62, now you do need to have a good equity position. We haven't talked about this yet, but your equity position needs to be pretty strong. But if that takes place and you've got a good equity position and we run this through, if you no longer have to make that payment anymore, that money can be going to a number of different places.
Yeah.
You can keep it in your checking account. You can put that payment in an investment account that could grow for you that you could use. You could even make a payment on your reverse mortgage. But doing a payment on a reverse mortgage is really cool. We'll talk about that later. We'll hold that for a little bit later in the conversation. But think about all the things that you could do with the payment you no longer need to make. And knowing that you can continue to be in that home for the rest of your life, and you just have to pay property taxes, insurance, and HOA. It's just massive.
Yeah, that's huge.
So you got those two for those that are living in their home. Now, the third group, you're not in the right house. Now, again, you might be looking at this and saying, okay, well, the house I'm in works, but I would really like to have that house that I saw in the Parade of Homes. So I'd really like to have a house that has a swimming pool, or I'd really like to have a house that has a bigger gathering area for the kids and grandkids.
Yeah.
And I'm telling you about basically my dad and all of this, right? These were
Sure.
all of the things that he wanted to have. And you look at the house that you have right now in the equity position, you say, okay, well, if I sell this and I want to buy something different, I have three options. I can pay cash. That's an option. I can get a traditional mortgage, but that has a monthly mortgage payment. And by the way, if I pay cash, all of the money is now illiquid again, and I can't really draw it. Or I can use a reverse mortgage to purchase that next house. And that is so fun to know that you don't have to use all of your money in order to achieve the goal of not having to make principal and interest payments.
Yeah, that's awesome. That segues really well into my next question. So you've talked a lot about reverse mortgages and how they work. You said that specifically, as you were answering my last question, you have to have a pretty substantial equity position, which leads me to ask, how is that loan amount determined in a reverse mortgage? How do you know how much cash you have to bring to the table in order to qualify for a reverse mortgage?
Great question. So when you're looking at the what we call the principal limit, this is the maximum initial loan amount that we can do within a reverse mortgage. There are three pieces to it that will determine that amount. The first is going to be the age of the youngest borrower or non-borrowing spouse. So if you're both over 62, then we're going to take the age of the youngest of the two of you. If you're single, you have to be at least 62 or older, but that's going to give us that birth date. The second is going to be the value of your home. The third is going to be where our prevailing interest rates currently sit. With those three numbers, we're able to determine what the maximum initial loan amount can be for you, whether you're purchasing a house with this or if you are doing a reverse mortgage on a home that you want to remain in for a certain amount of time. So those are going to be the three pieces that will determine that amount that we need to start out with.
Yeah, that's great. And Matt and I are going to do another video kind of demonstrating, case studying these specific situations with different ages of borrowers, different interest rates, different purchase prices. Once that video is ready to go, I'll link it right here on this video. So if you're watching this video, you can go ahead and click that video and get a better feel for that.
I would add, if you want kind of a general rule of thumb, the younger you are, so say you're 62, the more or the less money that loan amount can start at, because remember, you don't have to make payments on this loan, and so it's going to slowly increase through time, and you have a much longer life expectancy at 62 than you do, say, at 82. So at 62, we might start with a loan amount here, and let's say that the value of the home is here. If I'm doing this for someone that's 72, they're going to have a larger loan amount to start. Someone that's 82 might have an even larger loan amount. So when we look at how much is available, is really going to be determined again on those three things. But it's very easy, as you know, for us to pull together numbers very quickly and say, okay, this is what your scenario looks like. And then let's strategically plan this. Does it pencil to do a reverse mortgage? Will it put you in a better spot financially to do a reverse mortgage?
Yeah. And I think without fail so far, when we've walked through it with people I've been working with you, they've been so excited about the product, so excited about the possibilities that it opens up for them, which is, I'm a total reverse mortgage advocate. I think that every senior, regardless of their financial position, needs to look at it as a tool, prior to making the decision what to do with their real estate assets.
You just made a very good observation. A lot of us think that this program is meant for those that are just in dire straits. It's not. Dr. Wade Pfau, who's world renowned in his study and research in reverse mortgages, has mentioned that used strategically, a reverse mortgage can enhance the sustainability and the survivability of the retirement income. Well, that's huge. And it's not just for those that are in dire straits. I work with people all the time that are very well-to-do, and they use this program in a very strategic way to increase their total net worth and put them in a better spot financially and provide more safety and security in retirement. And so this is something I agree with you that anyone over 62, and those that are not 62 yet but might be in their late 50s or 50s, or even for me in my late 40s, this is in my retirement plan.
Yeah. Yeah. That's great. Okay. Well, let's go on to our next question here then. You've touched on a lot of these things really briefly. Let's go back and ask this question just to get a little clearer on it. What happens to someone's home when they get a reverse mortgage, whether they're purchasing or refinancing? All of a sudden we have a reverse mortgage. What does that mean for my house?
Great. So the easiest answer to that is everything remains the same. The reverse mortgage is a mortgage. There's a lien on the house, but title remains with you. If this is your reverse mortgage, Skyler, you retain title to the house. You have the ability to make payments on the loan if you choose to. You can sell the house if you'd like. If you were to sell it, the mortgage balance would be paid off, and then you take the remaining equity with you. Everything basically stays the same. The biggest difference is if you had a mortgage on it before, that mortgage gets paid off and the new reverse mortgage takes its place, and your obligation to make payments on it now become optional. Now, the mortgage balance itself, if you don't make payments, is going to slowly increase during time. But you do not have to make a payment on this for the rest of your life. In fact, the note takes it all the way to 150 years old.
Wow.
We haven't had anyone make it that far yet.
Nobody's
we'll
made
see.
it quite
we'll
yet.
see. But
life expectancy is getting longer and longer. We'll see.
Well, but you don't have to stay in this house, Skyler.
Yeah.
3 years down the road, you could say, hey, you know what? I want to move down to St. George, or I want to live somewhere where it's warmer, even outside of the state. This program is offered in all 50 states.
And could you do another reverse mortgage in that case?
Absolutely.
Oh, cool.
So sell your house, you pay off the mortgage balance, the remaining equity position is yours, and you take that and can go buy another house and even use a reverse mortgage to do it.
Wow. Cool. So that's a good, again, a follow-up question to that is, let's say I pass away at 150 years old. Just kidding. But somewhere along the road, I pass away. How does that reverse mortgage impact my heirs? I know you talked about it really briefly in our introduction, but maybe get a little bit more into the nitty-gritty. So obviously one of the concerns that I deal with when talking to seniors about reverse is, well, I really want to leave something to pass on to my kids. And there's the misconception, the fear, the false evidence appearing real that I'm not going to have anything to pass on to my heirs because the reverse mortgage means my house is effectively gone when I pass away. Tell us how that's not the case.
So at the end, one of two things is going to happen. There's either equity remaining in the house, which is the more likely scenario, or there's no equity remaining at the end. So if you think about it, if you start a loan balance here, the value's here, and through time, the value's projected to increase, the loan balance is increasing as well if we're not making payments. At some point down the line, those two numbers are going to be kind of the same, the loan balance and the equity position. Now, when we do amortization schedules today, that doesn't happen until past age 99 in most cases. Now, we can't project the real estate market exactly. We can just go off of averages. But those averages are what these tables are made from as far as, okay, where are our values? Where's the loan amount? And so as we project this through time, the more likely scenarios there's equity remaining. How much? It will depend on where the market's at and if any optional payments have been made and where interest rates have gone. There's a lot of pieces to that. But if we do have equity remaining, let's say that you have the reverse mortgage and I'm your heir and you've passed. As the heir, I now have 30 days to let the loan servicer know what my intent is. I intend to either keep the house or I intend to sell it. I then have upwards of a year to actually execute on that plan. So I've got time. The great thing as the heir of the estate, I still do not have to make monthly mortgage payments on that house. That's awesome.
Yeah, that's great.
And again, it is a great piece of safety and security for me. I do not have to try to fire sale this house either. I've got time. Now, if you had a traditional mortgage and you passed, I would have to figure out a way to stroke that payment in that next month, right? And if I didn't, it would rapidly go into foreclosure,
Right.
and I could lose the house. Now, I will share this with you and with your listeners to this. When my mom passed away, she had a normal mortgage, and this was many years ago, and I was the only one that was able to have enough money to stroke the payment on her house, and I could only do it for 1 month. And then I had to fire sale that house because there's just no other way. I didn't want it to go through the foreclosure process. Right. So a reverse mortgage is for my dad, for me, I love the fact that I know that he has one. Not only does it provide safety and security for him, but it does for me as an heir of his estate as well.
So it's actually advantageous for the heirs too.
Yes.
Yeah, that's great. Yeah, thanks for answering that. And then you also mentioned earlier the option for the heirs to purchase the property if there's a situation where the equity position is negative even. You mentioned the Cash for Keys program. Tell us a little bit about that. Yeah,
so in the scenario where there is no equity remaining, now previously we talked about if there is equity. If there's none remaining, as an heir of your estate, and we're going to use really easy numbers. Let's say that the home value itself is sitting at $500,000. And it's supposed to be valued, by the way, at $700,000. We're in a big crash in the market, okay? So we've lost a bunch of equity. And let's say that the loan amount was sitting at $600,000. You've had this reverse for a long time, and there was supposed to be about $100,000 left in equity, but there's not anymore. It's
because of that crash.
Right, it's crashed. So we have a $600,000 loan balance, $500,000 value. At that point, my options are very simple. If I want to keep this house, I'm going to get an appraisal at $500,000. I can buy this house from the estate, from the trust, at 95% of that appraised value, or $500,000. So in other words, I could come in and buy this at $475,000. And the difference between what I buy it for and what is owed, which in this case was $600,000, that difference is taken care of with the mortgage insurance. It's gone. Now, I could do that very strategically. I could hold that property that I purchased at $475,000 and wait for the market to turn back to where it should be, which is closer to $700,000, and then sell it. So I could actually reap the benefits of, a great real estate decision to hold that property. And I may hold it long term, but that could be something that I can do. But if I don't want it at all, I decide, hey, I don't want to buy it at 95% of the current appraised value, then I can call this servicer and say, hey, I'm interested in doing a deed in lieu of foreclosure. I've learned about the Cash for Keys program, and I can get upwards of $12,500 in money that would be paid to me to basically do a deed in lieu of foreclosure. I walk away with that cash, and I'm out. There's no repercussions against me or any of the other members of the estate.
Wow. So even it's not only will you not get caught holding a bill with this program, but you'll get caught with $12,000 to your name to divide amongst the heirs.
Yeah.
And that's in the worst case situation.
Correct. Well, let's talk about worst case scenario.
Yeah.
I don't call the loan servicer. You've passed, and I'm just freeloading in the house, right? I'm going to start to get some mail coming to me saying, we're going to foreclose on this because we can, because, Skyler, your dad,
primary residence anymore.
He's gone.
Passed.
And for a year, I could be there before I would finally get kicked out. But at the end, I still don't. That's if I was living with you.
Sure.
We haven't talked about kids living with their parents. I'm sure some of you are dealing with that.
Yeah.
But the reality is I wouldn't get the 12.5 because we didn't do a deed in lieu of foreclosure. Foreclosure actually happened, but I did have more time in that house. So worst case scenario, I get nothing as the heir except for extra time in your house, which is something. I could walk away with some money with the Cash for Keys program, or I can very strategically work on purchasing this house in a down market, which is what your specialty is, right?
Yeah.
Is helping your clients figure out that piece on the real estate side to put them in a better spot financially in their real estate asset decisions.
Absolutely. Yeah, cool. Well, hopefully that answers a lot of your questions as it relates to what happens with the title of your house with a reverse mortgage, what happens when you pass away, what happens for your heirs. Because in a situation where you pay cash for the home, then you may be able to leave a big chunk to your heirs, and maybe that's really important to you. But you don't get to have any access to that cash while you're alive.
Let me ask you something, Skyler. Do you think, and again, I'm just playing this out. If your goal is to give money to your kids, would you rather give some of that money away with a warm hand or a cold hand? You know the difference?
You're still alive.
Yep.
With the
Warm hand. You're still alive. You're still
Yeah.
kicking, right? For me personally, I'd rather give money to my heirs with a warm hand.
Yeah.
I would rather have that equity position and use a reverse and have that line of credit growing and be able to take out some of that money on a month-to-month basis. Or maybe it's for a child that needs money for college or a wedding. Possibly they're serving a church-related mission or something like that. I could use that money to help my kids and grandkids when they need it. Because if I'm in my 70s and 80s and I'm perfectly fine financially, that would mean more to me. I'd like to be able to provide vacations for them and fun things, build memories that we could share things together.
Yeah. Yeah, that's great. I haven't heard you describe it that way before, but that would be meaningful to be a part of the gift giving as well, to be a part of their lives when you give them the benefit that you've saved your life for, to be able to enjoy it together, make memories, like you said. Giving with a warm hand. I like that.
Right.
So Matt, I don't want to take a ton of your time today. I know we're kind of brushing up against the half hour here. Anything else that you would say to our viewers as your kind of final closing last word on home equity conversion, reverse mortgages?
The only thing that I would say is please consider it. It is so simple for us to be able to provide basically a proposal that will tell you exactly how this is going to look for you, to take this through the future, to show you how this is going to impact you financially in a great way, and really have you put this into your retirement plan. I challenge actually each one of you to allow for me to be able, or someone that's a reverse mortgage professional, to show you what life is like, the pathway that you're currently on, how that is going to be different if you choose a pathway that includes a reverse mortgage. I promise you will be absolutely shocked. I get 2 questions at the end of every presentation that I do with a client.
Mm-hmm.
The first one is, this sounds too good to be true. Truly. Too good to be true, because we're not talking about just thousands of dollars. In most cases, we're talking about hundreds of thousands of dollars in additional retirement cash flow.
Yeah.
It's huge. The second one is, what's the catch?
Mm-hmm.
The third one is, why isn't everybody doing this?
Yeah.
And
right,
we're talking about this right now so that more people can get the true information about what a reverse mortgage is and how it works, so that they can see how it can be used in their retirement planning. And yes, we can do this program if you're out of money, the house is the last thing that you have. We can have a program for you that can help. Reverse mortgage works great there, but it is designed now and endorsed by many financial planners as something that we should integrate in as soon as you reach 62. The earlier, the better. And I would love to be able to show you how this works. And it's super easy. We need birth date, value of your house. That's it. That's all we need, and if you currently have a mortgage on it or not. And that can provide us the information we need to be able to show this in a very personal way for you.
Thanks, Matt. That's a great summary. So again, if this has piqued your interest, if you want to walk through those scenarios like Matt talked about, give us a call. You can comment as well. Find a way to get a hold of us. My contact information is all in the video description. We love helping seniors who are in these kind of situations, who's trying to figure out how to maximize their cash flow in retirement, trying to figure out how to get in the right perfect home in retirement. That's what we do all day, every day. So give us a call, send us a message, and let us know how we can best serve and help you to achieve your retirement dreams. And with that, I just want to say thanks for watching. If you enjoyed the content, like and subscribe, share it with your friends. Help us to serve more seniors, because that's what it'll do for us when you like, subscribe, comment. It'll help the content to get out there, help us to pass along this education that can be really life-changing for seniors. So anyway, thanks for watching. We'll catch you on the next episode. Thanks again, Matt.
You're welcome. It's been a pleasure.